Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Although no change has been recorded today on the larger time frame, we now remaining alert due to the fact that we are now trading on the lower half of the monthly chart and in the vicinity of the month opening price. On the daily, we had continuation from Tuesday's move downwards and we re-entered the previous 8-day balancing range. Took the 3000 area and closed the gap left last week. Now, analyzing closely today's move, there is some relevant information that jumps to my mind. First of all, the volume of the underlying market, which is the New York Stock Exchange, was not aligned with the extent of the move we saw today. For you to have an idea, the volume today was pretty similar to Tuesday's, which was only 15% higher than Monday. For you to have an idea, on June 28, we had a very strong day. It was 4.5 million, and you can see the extent of that move, which was here, this kind of. So today we had a similar range, and actually we closed almost at the low, but the volume was only 2 million and something. So that's not very supportive of the move down. Number two, despite a good deal of balancing after the initial break, we have plenty of back and forth, which is okay because it's market finding acceptance. Now the late move seemed very emotional. We started pushing lower and suddenly it accelerated and stretched, leaving 3 distributions on the profile, one here, and you see the single prints over here. And very low volume done on this closing periods, which is not normal. Usually you have a lot of volume done on those 2 periods, but this time the volume was not that high. And number 3, the give back seen on the C period, we saw a strong bounce. Then if you were looking closely on the L period, you saw another one. And then previous to that on the K, attempted to go and went back up. That seems to be, and also there was a visual representation of this on the ladder. You could see big orders getting filled on the buy side. And despite that, the market did not go up. So that suggests there was some level of accumulation of long positions here, which we need to keep in mind. So having failed at the top of the balancing range, like I highlighted here, it is, the likely destination is the bottom of the range. However, with the data presented just now, that would suggest that the risk for shorts have increased with the move today. Having said that, the immediate focus then is on assessing continuation from this late move with acceptance above the base, which is at 29.93, denoting change. If we get acceptance within or below, that obviously favors the downside. And just as reference, the next references down would be the halfback of the 9th of July, and then you start the singles of the 71.25, and then the bottom of that day, which is at 65. But notice that in this area, 71, 65, 69 is exactly where we broke from the 4-month balancing range. So this is a very interesting area, and this probably is a demand area, and you expect some response to be seen there.